Hello, guys. How we doing tonight?
Yeah,
I'm sorry that song is long, but I just fucking love it. I can't do anything about it. I have to listen to it for the whole duration. So, quite a long song, but it is worth it. Can I get a quick confirmation that you guys can see me? Well, see my screen? I always do that mistake. Awesome, awesome. Song is fire. Yes, it is, Vishro. Vishro? I'm sorry if I'm mispronouncing your name there. By the way, guys, would you all enjoy a face cam during these? I've been debating it. I really have no issue with sharing my face. I mean, I'm sharing my real name out there, easily accessible. You can find out anything about me. I think that's important. But just for the YouTube videos and for these live events, I wouldn't mind putting on a face cam. You want to see the hair? All right. Well, for next PA review, I'll set that up. Now I'm not set up. I don't have any recording for it, so not going to happen today. But I think it can bring another level of transparency once again. And I don't mind sharing my face out here. Before it was to hide the fact that I'm young, to be honest. I didn't want people knowing that I was young because I didn't want people to have less faith in me because of that. But I think I've proven myself multiple times over. Most traders are ugly. You will look better and smarter than all of them. Fair enough. I'll take that, Perez. Thanks. That gives me a little boost of self-confidence. But I'm not scared of sharing my face at all. But enough talking about my face and my visual appearance, all right? Let's talk about price, because I don't know about you guys, but for me today was boring. And you might have seen from my Twitter, I actually just didn't even look at FOMC because I opened my chart, saw what happened the morning, and I had a feeling, right? That data told me that it was going to be uninteresting what's going to happen in the PM, right? Before I used to not tell you guys these things, but now I know. If the morning did not create some form of high probability level in market structure, then I'm uninterested in the PM because it's just going to keep consolidating. And that's what we saw today. Now, were there opportunities? Yes. So that's what we're going to look at. We're also going to look at the AM session. But first, it always starts on a daily chart, right? And now you can clearly see after a full day of consolidating, we're already 150 handles. We're going to see a run. But the important part is that our target is higher. Why is our target higher? Because we had a large new week opening gap, and we understand that later in the week, that's going to be a huge objective, and it didn't get filled at all, right? We did not trade above into it, not even, sorry guys, on Monday. We did barely trade into it on ES, but not on NASDAQ. And also today we returned to it, and yesterday we were within it. Basically, this leads to just we're consolidating until this gap is filled, and then I can look for some nice expansion moves. And when this happens, I like to focus on session liquidity. But the important point is our draw is higher. So even if we're in a bearish fair value gap, which is what this marks out, right? We're including the volume imbalance, which in this case is also a liquidity void. This has to be filled, right? So even before we can consider downward prices, we have to go here. And then once again, right, we have our relative equal highs. So clearly, for myself at least, I was looking for higher. Definitely looking for higher. If we go down to the 15-minute, and this is where I like to go in replay mode just so we can see just the current day. If we look at the power of 3, what do we see? Well, clearly, we opened, manipulated to a high, and then expanded below. This is a clear daily candle that is going to expand below. Yes, but it's counter bias. What does this tell you? Well, if my target is right, and my target is still higher, this is going to be a consolidation candle. So we're just going to have a large retracement at the end of the day to close a little like an inside bar. Now, I had to change a few settings with these power of 3 indicators. So let me just bring back the correct one, and that would be it. And looking at our daily chart, right, which is what this indicator showcases, we can clearly tell that we had pretty much what people like to call a doji, right? A candle, all wick, no body. And I'm not going to make any weird allusion to that, just all wick, very small body, all right? And what does that lead to in price? Well, you want to be there early. If not, you're just going to be trading a return into the range, and you're just going to be consolidating. And it's hard to see that on a 15-minute chart, especially looking at the AM delivery, which was actually not too bad, right? You had a first expansion lower and then a continuation off of this gap after a lot of consolidation. Once again, you had your move lower completed. You went to reach your first discount and efficiency of this range, which we'll look at in a second, but this was higher time frame, right? But as I tell people to do, you should wait until FOMC. This is a very important news, and the initial injection of volatility is at 2, and then the other one, which is a press conference, starts at 2:30. So I even tell students and such to wait until 2:45, give it 15 minutes, because during that time, that's just your secretary of the Treasury, I believe that's what they're called, it's just talking, right? And that's not interesting to us. If you did trade in the morning, there were some opportunities. It's weird for me to look at the morning because, as I said, this is not something I trade. FOMC morning is not something I'm interested in. And if you look, you really had to be positioned early. And let's look if there was actually something to position you early. So right at 9:30, you already have a clear Judah swing before. Did you have any sort of SMT? Well, you had SMT, but only, well, straight at 9:30, pretty much. So right at 9:30, let me just actually move this up so we can see it a little bit better. So you had SMT at 9:30, and that's all you really needed, to be honest. I'm just looking if there was some clearer SMT in the past, and no, there was not. So just SMT at 9:30. What does this tell you? Well, I have a breaker block already. I have multiple breaker blocks. So I'm just looking to enter. And looking at this, we had no retracement into inversion fair value gaps and no bearish fair value gaps all the way down here, which to me, that would be my partial if I'm entering here. So that's already too late. So even then, there wasn't any good setup early in the day, and then you'd have to filter through all this bullshit. If I'm backtesting and I see this, I don't think, oh, well, maybe I took a long here and closed it out early or break even and then took a short and then, no, this is a loss. I just regard this sort of price action as losing because my model focuses on expansion. If it's not expanding, I don't have a good trade. Maybe I have a trade that makes me money, but that doesn't mean it's a good trade. So whenever I'm backtesting or reviewing charts, I don't like to look at opportunities within this because that's where I shouldn't trade or it is just a straight loss. So either I notice it was consolidating early and it was one loss, or this is max loss, which happens, right? Which is just 2 losses in a row. Part of the game for me. But as I said, I don't like trading before FOMC. And as I also said on Twitter, FOMC rarely gives me setups that are worth my time. Hence why I don't like to look at it too much. And my running on FOMC is, I don't know if you guys remember, we did a live trading of FOMC, but actually I lost power like just at FOMC. But I had taken a loss and then got a win. So that's like already there, 50% win rate. Then I lost the last FOMC, won the one just after that. It's so back and forth for me, FOMC. I don't have good trades on FOMC, so I just like to stay away. One of my students took a long today, and actually, well, there you go. Sam's in here, demo trading today. And he actually took a long right after the news, right? So what are we waiting for? Well, we're bullish, right? We clearly established that on our higher time frame. So all we're really waiting for is after that 2 p.m. volatility, we're looking for manipulation and then looking at 2:30 for distribution. Did we get that? Yes. Was there SMT? Yes. Right? All of this. Basically, this level was not taken out. So all of this and afterwards is SMT, right? You can draw it with precision. I like to draw it when it's first available, right? So from that point on, there was SMT. Now, if I'm looking for a breaker block here, I have a very clear breaker block right here, bullish breaker block that allows me to trade this fair value gap, which means that you have a unicorn entry. And then where would your stop be? Well, for me, I'd see this fair value gap. I have no valid inversion fair value gaps all the way here, right? They're all closed through on both sides. So I have order block, and then I have the liquidity below here. But I have to allow for that liquidity to be swept. But this is where it's a little hindsight, right? This is a little far-fetched because oftentimes I tell you guys that I just count this liquidity as one, but I still don't want to see this level taken out, especially if there's SMT. And at this point in time, there was no SMT. You would have actually gotten stopped out on SMT here, and we can showcase it on ES. But Sam, who is in here, as I said, had his stop here, which is perfect, right? Mechanical 3PD array stop loss rule, your stop should be here. If there's nothing to the left, of course, your stop is going to immediately go here. But this is one of those that seems a little too cherry-picked for my liking when we're reviewing, and I didn't trade this. If I traded this, I would show it to you guys, and I'd be quite happy to explain why my stop was placed here if I actually placed my stop there. But since I'm not trading today, it's a little weird. But we're going to look at it. Where would be a clear objective? Well, of course, I'm going to look at the current daily range, and I'm going to look for an intraday retracement. Right? Because worst case scenario. Now, the latest expansion range, right? As we said, focusing on the symmetry. So here we went up, right? And then here we went down. We had a retracement. We went down, had a retracement, and then we went down. We're still in this move. So if I'm using a range and I want to look at my first premium inefficiency, I want to focus on my latest one. And looking at this range, let's just say we move it aside. I wanted to take that long, but the calendar says to wait for 2:45 p.m. before engaging. Exactly, Alex. That is what I do. Just because when you're basically the press conference is going on. Truth is, FOMC is just a very low probability time to be trading right after the news. You're better off just waiting until power hour, which is just from 3 to 4 p.m., right? The last hour of trading of the day, of regular trading hours. But the truth is, when you're trying to trade expansion, you don't have a lot of time left at that point in time, and it's very rarely expansion. It's most often just retracement. So it's a little weird for me to be reviewing these days, because if I was to tell you the best thing, it's probably just not to trade it, but it is profitable to trade it. So if you trade the Rise model every single time at that point in time, at the end of the day, you'll make money. At the end of the month, well, there's one per month. Let's just say at the end of the year, you'll make money. But it's just such a waste of time, in my opinion. I'd much rather spend this time off my charts doing something else than doing this. And of course, the person saying that to you guys is someone who has 3 different businesses, a bunch of projects, a community that he does live events in. Like, I have a lot of shit to do. So whenever I can save time by not spending my time in something that I believe is just not worthy, that's what I do. Just going back to that range, of course, the clear objective would be this. Now, in this case, I would refer to the full daily range. Why? Because my bias is long. So I don't think that we're going to retrace into this range. I think that we are going to expand higher. I think that we are going to reverse from this. And we have clear relative equal highs at the high of day. So I would have been targeting something like this, and looking at this, I would be targeting this high, but once again, this is low resistance, right? These are failure swings. There is no defense for these. Price should just fuel up and reach for the next one. So now my target would be this. I like to tell you guys these, but just for the sake of backtesting, we're going to look at this. Right? Because what are these reviews? They're pretty much how I backtest. Of course, when I'm in front of my charts and then I review these later, I can compare what I saw live today compared to what I should have seen. And that's where the actual value is. For me, at least, doing these reviews, right? But today I didn't trade, so that's why I'm saying these are a little weird. But nice 2.25R to the very pessimistic approach. As I said, I would have looked to target these highs, actually relative equal highs right here, which is just much better of an objective in my book. And if we bring our standard deviations here, and they would be here, they would be quite small in this case, actually. So probably won't reach all the way up here. Yeah, no. So just looking at this, you would have the confluence from the equal highs more so than anything else. And I would look to hold. But once we have a retracement here into the discount of this range, right? Latest 1 minute range. And this is where I like to use OTE. I don't use it at any other point in time. See, I don't even know what side I need to draw them. But whenever I like to use them is in this specific case. When I'm looking for a retracement of a lower time frame range, I like to use these levels specifically. Now, we did not tap into OTE, but we returned to a discount, tapped into my opening price of the 4-hour candle, and then continued. This is an absolute stop loss trail at this point in time. And then once we take this and tap into midnight open, once again, that's a take profit opportunity. Alex from the lab, right? So the lab trading, good friend, I believe so, has a 2 variable model. So whenever he makes a decision, makes a trade, he takes into consideration 2 variables. So for him, he uses order blocks, but the second one is opening prices, because price will just gravitate between these levels, and you can always utilize these levels to see the structure of your higher time frame charts. If we are returning to midnight open, this can cause a pullback. It should never cause a pullback all the way down here, but it did in this specific case. And see, that would have been take profit, which is actually quite a good take profit, right? So if you take half your position here, and let's go once again to our more pessimistic objective, 1.125 R, that's already pretty good. And then you just break even, trailing your stop here, taking an additional 25%, either at this level, which is just pessimistic once again, or midnight open. Whenever a level seems too cherry picked for price action review, I like to just say, oh, well, what if I actually took profit before, right? At a clear level. That's just because I don't like showing you guys something and then just telling you in hindsight, this is it. If I have my executions that I send in general, right? When I trade, most times at least, when I remember, you guys see that, okay, well, this is where I took profit. So now I can back it. Right now, I can just tell you, well, if I would have traded that, then I would have taken profit here. But I would look to take profit here. Once again, pessimistic approach, you take out 25% here. You're up another, what is that, like 0.7 R? So you're already up almost 2 R realized, and then you get stopped out a little in profit. This is pretty much a 2 R realized trade. So risk $1,000, close the day with 2K. Could we use the breaker block between 14 and 1430 for standard deviations directly after the SMT? So you mean this one, right? Here and here. And the answer is yes, right? Why do I always use the most recent breaker? Because that's the one I'm entering on, and that's the easiest way to bring a mechanical rule set to it. Now, there was another breaker who's actually right here that you could have used as well. And all of these standard deviations should tell you the same thing. So you'll notice that my small standard deviations just create a zone, which is the reversal range of the other one. That kind of stuff is just where price aligns. That is how price moves proportionally. So you can use any single breaker block as to use for standard deviations, but I just prefer to use more recent ones. But of course, in this moment, I would use this one over this one just because, as I said, more recent. But I would use the small one. Notice that the standard deviations are a little small, so refer to the ones to the left as well, just to give me more insight. Does that make sense? Hopefully it does. Awesome. And other than that, I mean, we can talk about shorts here, but how can you justify a short? In my book, you can't. And how can you justify going long here when we barely just took this out and formed SMT once again? Like, it's, to me, this is what I call bullshit. So this move is not a move I can predict, and it's not a move I ever want to be trading or predicting. These are what I call random moves. Are they actually random? Probably not. There's probably some sort of logic, but as I always tell you guys, I like to keep things simple. I don't want to add some complicated shit that tells me that this move is going to happen. Why? Because I could have been in this move. And of course, that's before the news, right? Before 45, as I said. And if I was going to wait for 45, truth is, I would have just looked at my chart, noticed there wasn't any trade for me, and gotten out. And that's what happens most FOMC days. That's why I didn't want to waste my time today and look at it. So if there is a day you need to skip, like you have to schedule some sort of medical appointment and you're going to miss a trading day, miss FOMC. Fuck FOMC. That's the truth. A lot of people like to trade the power hour. because truth is, if FOMC goes up, like in this case, you'll see the 2:30 p.m. here, bullish candle, probability of closing above that level the end of the day, right? So 4 right here is extremely high. But if you look at 4 right here, we actually went all the way down here, but you could have got this move algorithmically speaking. Execute, don't improvise. Exactly. Love this. But yeah, so quite a boring PA review tonight, guys. I'm sorry. I wish the markets could have done more interesting things, but I see Mark. I don't know if I need to say the end of your name here or not, but our algorithmic trader here, I guess is the way I like to say it. But now people associate that with ICT. What I mean is that he trades with bots now a lot, right? You might have seen him in the bot channel if you are part of that. You said it best, just Wednesdays are typically shit. That's the truth. It's like watching a baseball game. You see something new every day. Great stuff. Well, I'm very glad. Very glad. Truth is, when it's FOMC, I just don't like to be there because I have a very low occurrence of setups. So setups are rarely present. And when they are, they often don't pay as much. So I am studying if trading before FOMC would be worth my time. Like, see, if you look at this morning, you had a beautiful move in the AM in terms of size, but in terms of delivery, that was disgusting. Gotta expect big wicks just in case. Yeah, exactly. And of course, 25 margins on the high impact news events on most prop firms and most brokers as well. I have close to a 10% increase in margin, I believe, with AMP. I don't know, because I never look to trade before news except on my swing trading account. And on that account, it's never a problem, because if I risk 10%, well, whoa. Okay, let me rephrase that. If I risk 1%, I just added a 0 there for some reason, then I don't care about the 25% margin increase because I have 99% of my account left on margin. And to be honest, I don't trade with leverage when it comes to futures. I'm not interested in trading with leverage. We already have contracts which are your leverage. You want to place more trades, just trade more contracts and let your account build itself, pretty much. That's what I'm interested in. But as I said, not much interesting today. Hopefully today we have a very nice PA day. Of course, we can go back and look at our daily chart. I'm not going to remove the drawings, but just for tomorrow, same thing, to be honest. We need to fill this gap. We don't need to fill the entire new week opening gap, which are these 2 gray lines, but I want to see us touch this wick. This is what we call a liquidity void, at least in the ICT world. And truth is, it's just a gap. There's nothing there. There's a big gap in price. Price did not return to these levels. I want to see us balance this area. I want to see us trade inside this area. And for me to call this new week opening gap balanced and no longer a target, I need to see a bullish close all the way through it. So I need to see a bullish body all the way through it. Since we also have no body at all here, we could also see a bearish body. Right? So for example, I'll show you guys here, for me to say that this fair value gap is now entirely balanced, you see there's upside delivery, downside delivery. The bodies cover this. And now we reused it. That's actually just a coincidence that I chose that one. But this is what I'm looking for here, right? We had upside delivery here. Now we had nothing on the right. So I need to see downside delivery and upside delivery. Does that make sense to you guys? This is not something I use quite often, so I don't like speaking about it. I like to keep the logic simple and tell you guys, well, this is what I use every day. This is what's going to make you money. Now, the other stuff is just some cool things to better understand the same moves. But as I was saying, right, I hope tomorrow we get better. We have some very nice news coming in tomorrow and Friday, so definitely going to be expecting some nicer moves for the rest of the week, but I'm not going to be picky, right? A week that starts with a 4.6% down move on Monday is typically not a week where I like to engage aggressively in the markets. So on that note, I wish you all a great night, and we'll see each other tomorrow for another PA review. Have a good one, guys.